Hiring and firing. Hello and welcome to MOBI's session on hiring and firing. As a small business owner, you probably started with just one person, you. You started your entrepreneurship journey as the founder, the CEO, and the person who does it all. Eventually, you may get to the point where you realize you have more work than you can do on your own. When this moment arrives, you have a decision to make about next steps for your business and whether to hire someone to help. Hiring a staff member is a big decision that will impact your business in many different ways. Finding the right person and getting them in the right role can be a game changer. It could mean increased revenue, a better customer experience, and it could even improve your own work-life balance by reducing your workload or letting you tackle other projects in your business. On the flip side, a bad hire comes with negative outcomes. It could mean financial deficits like lost revenue or unsatisfied customers. If a new hire doesn't work out, whether they resign or are asked to leave, the employee turnover will cost you time and money in dealing with any consequences and finding a replacement. The good news is that there's a system to help you determine if you should hire, who you should hire, and what happens if you need to part ways. Here's what you can expect from today's session. Today's topics include how to know if you should add an employee, including what type of help you should add, how much help do you need, understanding the difference between an employee and an independent contractor, business structure and preparation, and cost-benefit analysis. Then we'll talk about how to hire employees, including representing your community and customers, job descriptions, and how to pay employees. After that, we'll discuss the hiring funnel, also known as the recruitment funnel, including the stages of the hiring funnel and unexpected situations you might encounter. Next, we'll talk about the transition to success, like onboarding, managing, and motivating employees. Then we'll talk about workplace transitions and when it's time for an employee to leave your business, including how employee departures impact your business, offboarding an employee, types of departures, preparing for the termination conversation, and parting on good terms. We'll wrap up today's session with our list of top 10 do's and don'ts. Before we get started, it's important to note that there are numerous legal and regulatory considerations when it comes to adding and removing personnel in your business. Regulations vary by country, state, or province and city, and they are updated frequently. Please make sure to do your own research, consult with local experts, and ensure that you are following all local and national guidelines during the process. We'll talk about useful resources you can use throughout this session that can guide you through the process of hiring or removing personnel. For US-based employers, you can learn more through the IRS, or Internal Revenue Service, the Department of Labor, the US EEOC, or Equal Employment Opportunity Commission, state and local websites, labor unions, and the Society for Human Resource Management, or SHRM. In this session, we'll use several terms interchangeably to refer to individuals you hire to perform services in your business, regardless of how you hire them, such as employee, staff, and worker. In this context, we'll assume these terms mean the same thing and encompass both employees and independent contractors. However, it's important to note that how you hire an individual impacts their legal relationship with your business. An employee is someone directly employed by your business, whereas an independent contractor is hired and compensated through a distinct arrangement or contract, either directly with the person if they have a consulting business, or indirectly through a consulting organization. If a certain topic or piece of information is specific for a contractor, we'll be sure to use that term. We'll cover more about employees and contractors later in this session. Hiring and firing for your business can feel overwhelming. By taking a step-by-step approach, you can make progress with confidence and achieve your goals. Let's jump in. We'll start with how to know if you should add an employee. When you reach the point where you have more work than you can do on your own, it can feel bittersweet. You may celebrate the fact that you have business and customers, but you may also feel overwhelmed by the amount of work and all the different types of work you have to do. When you reach this point, it may be time to hire more help. There are several things to consider, and we'll walk through them here. You may have heard the expression working in the business versus working on the business. The first half of that phrase, working in the business, refers to doing the direct work of your business. For example, for a lawn care company, it would mean cutting the grass yourself. For a bakery, it would mean you're baking the food and ringing in customers. At a barber, you're styling hair and sweeping the floor. In addition to the main focus of the business, there are tasks that are considered working on the business. This includes wraparound and support work that has to happen, such as paying taxes, purchasing supplies, and conducting sales. Both of these pieces are crucial to business success and important for you to consider which piece is the best fit for a new staff member. Do you need someone to work in the business or on the business? What type of help should you add? The first step in hiring is to determine what types of work you want help with. There are a couple of ways to think about this idea, but two of the most common are 1, focus on what you enjoy, and 2, focus on the bottom line. Let's start by focusing on what you enjoy. Many business owners naturally gravitate to certain aspects of their business. For example, if you started a dog grooming business, it may be because you love working with dogs. Out of all the tasks involved with your business, that's the part you enjoy the most. As another example, maybe you started a convenience store in your neighborhood because you saw a need. However, rather than interacting with customers, what you really enjoy is keeping the books and ordering inventory. Consider what motivates you and how you would ideally organize your tasks. Ask yourself these questions. First, what parts of the business do I enjoy the most? What do I want to personally continue working on? And then, what parts of the business do I wish I could hand off to someone else? What parts of the business make me feel unmotivated? Alternatively, you could focus on the bottom line. Another way to approach the idea of adding help is to focus solely on the cost and profit aspects. As an example, imagine you've decided you need some help for your business. Your first idea is to hire a bookkeeper. Next, you will consider the cost of hiring a bookkeeper for your business. Since this is a specialized skill, that bookkeeper may charge $30 an hour. If you know how to manage your own books and finances, you can save money by doing it yourself. Instead, you could hire someone more entry-level to work on different areas of the business for less. For example, you could hire someone to help customers and ring up transactions for $15 an hour. These two options achieve the same result, but one costs half as much. How much help do you need? Now that you have an idea of what you need help with, the next step is to determine how much help you need and how consistent the work would be. Let's talk through a couple of examples. Let's say you love working with your customers, but you need about 5 hours each week to step away from the direct work of the business so you can focus on the financials. You could hire a cashier for 5 hours per week, or you could hire a bookkeeper for 5 hours per week. Another example. You have a lot more business than you can handle. That might mean you don't have time to work on the business, or it might mean you've thought about declining new customers because you can't keep up. If you had someone by your side full-time for 40 hours a week, you would have plenty of work for them to do. Employee versus independent contractor. An employee is someone who's employed directly with your business. A contractor is someone who works for themselves or another business in providing services to other organizations or people. Depending on the needs of your business, you can decide whether to hire an employee or a contractor. Let's talk about the structure of each. Employees are directly employed by the business. Employers have more control over the work, scope, and hours of the employee. And employers pay a portion of the employee's payroll taxes. Employees tend to be more involved and invested in the business's success, and employees may have access to more benefits and perks through the business, like health insurance, vacation time, and sick pay. Alternatively, contractors work for themselves, or maybe they're hired by another outside business. They usually have a short-term, time-limited, or specific scope of work, and they're responsible for all their own payroll taxes. Contractors have more control over their schedule, scope of work, and how the work is completed. And they provide their services to multiple businesses at the same time. In the US, there are legal definitions of employee and independent contractor that vary by state. Common law, meaning law that is based on judicial decisions and precedents rather than written statutes or regulations, considers three main categories in making the distinction between employees and contractors. These are behavioral, financial, and type of relationship. Let's ask some questions to help address the key considerations for each category. First, behavioral. Who controls the work? Who controls when and how the work is done? Who controls how the worker does their job? Is there intended to be a continuing relationship? Next, financial. Who supplies the materials needed? Laptop, cutting shears, etc. Who set the rate for compensation? Who pays the payroll taxes? Does the person in question have other similar customers? Example, a bookkeeper with multiple clients is a yes. And lastly, the type of relationship. Is the relationship intended to be ongoing? Where does the work happen? Does the worker advertise their same service to other prospective employers? Does the work engage with your business's clients or customers? It's important to understand the requirements where you will be doing business to ensure that you, your business, and your client or employee are following the law. In some cases, what you think of as a contract position may legally qualify as employment, which may require you to provide certain benefits for a person you hire. MOBI's blog post about how to start a business as an independent contractor discusses this point in relation to California's laws. For example, several years ago, California's law changed, adopting the ABC test to define an independent contractor as one who satisfies all three of the conditions below. A, the worker is free from control and direction of the hiring entity in connection with the performance of the work. B, the worker performs work that is outside the usual course of the hiring entity's business. C, the worker is customarily engaged in an independently established trade, occupation, or business of the same nature as that involved in the work performed. Source, California Labor and Workforce Development Agency. Some exceptions expressly require the worker to have registered and licensed their business in order for the exceptions to apply. For other exceptions, an established business is not required, but is one of the many factors weighing towards allowing the worker to be considered an independent contractor. Scan the QR code on your screen to read the entire blog on the MOBI website. You can also find other blog posts by visiting the MOBI blog for entrepreneurs page in the resources and tools section of our website. MOBI blogs are written by our team, partners, and guests, sharing expert advice, insight, and experience on business topics. For more information on determining whether someone should be classified as a contractor or an employee, visit the IRS webpage titled Independent Contractor, Self-Employed, or Employee. Outside the U.S., you can visit specific organizations that are in charge of taxes in your country. Now that you've decided you need help for your business, you've evaluated what type of help you should add and how much help you need, let's talk about considerations for your business structure and preparing to hire. As you expand your business with new staff, there are financial and legal guidelines to consider. It's important to know these in advance because it may affect the cost-benefit analysis, and because the failure to comply may have costly consequences. The good news is that you're considering and planning for those things on the front end, so you're prepared. Let's discuss several structural issues that you should research and consider. Are there changes to your business insurance or business filing structure? Example, you're a sole proprietor and you need to change your business entity. Do you or will you offer benefits such as health insurance, 401ks, etc.? Are there any changes needed? For small businesses without a group health insurance plan, consider offering QSERA, Qualified Small Employer Health Reimbursement Account. Do you need to notify any local government about your hiring? These rules change frequently and, if in the U.S., vary by state. Check local regulations in your area to learn what and when to report. Will your payroll and tax structure change? Example, Will you pay in cash if allowed in your state, by check or direct deposit? How and when will you pay the payroll taxes? How does this impact your workers' comp insurance? Do you need to pay into your state's unemployment benefits? All of these considerations vary by location. Be sure to research the current rules for your area so you are operating legally. Payroll service providers, or PSPs, can be hired to assist small businesses in executing payments to employees and contractors and help ensure appropriate taxes and contributions are considered. Visit MOBI's accounting and cash flow session to learn more about PSPs and other bookkeeping topics. Before bringing a new worker into your business, it is a good idea to consider what this person will need in order to do the job for which they have been hired. For example, will they need a computer and specific technology? Will they need a place to work and a phone? Will they need a schedule or a plan for training? Are there other tools or information this person will need? Be sure that you've thought through the new position from the perspective of daily activities as well as overall goals to determine what they will need to do the job. Cost-benefit analysis. The term cost-benefit analysis may sound complicated, but the idea is simple. It is a process of examining information to help you determine the likelihood that you'll benefit from a business decision. You'll also hear the term return on investment, or ROI, which is a similar concept but primarily only focuses on the financial impact of a decision. With a cost-benefit analysis, you can take into account some of the wraparound or intangible benefits of a decision. These are benefits that have an impact but can't specifically be measured. One example might be better work-life balance. Considering both tangible financial implications as well as intangible wraparound factors through a cost-benefit analysis gives you a broader and more complete picture of the impact of your decision. You could use this technique for all types of decisions, like buying a new machine or moving into a new office space. In this case, let's apply it to the process of hiring and adding a worker to your business. First, determine how much it will cost to add an employee or contractor. You love working with your customers, but you need 5 hours each week to step away from the direct work of the business so that you can focus on the financials. You could hire a cashier at $15 an hour for 5 hours, cost $75 per week. Or you could hire a bookkeeper at $30 per hour, $150 a week. What other costs might be included? Consider things like benefits, insurance, supplies, or technology, time spent on training, etc. While there isn't a strict, universally applicable percentage you should add to your cost estimate when hiring someone, a general guidance for small business owners is to add 20% to 30% to an employee's hourly wage. Second, determine the value or financial benefit of adding that person. What's the financial benefit? Can you estimate how much an employee will increase your revenue? For example, if you add a part-time employee at 20 hours per week, will that increase your sales? If so, by how much? What are the intangible benefits? Does it reduce your stress? Does it allow you to focus on what you enjoy? Does it provide a better customer experience? Third, compare the two numbers and determine if it's profitable and beneficial. It can be a challenge to nail down the true costs and benefits associated with adding an employee. You don't have to aim for perfection here, just get as accurate as you can. Ask other small business owners to see if they can identify other expenses or potential positive outcomes. Talk to friends and family and ask if they think of additional considerations. Determine how you will weigh the bottom line, quality of life, and your other goals. How you hire employees. Ready to bring someone on board? Let's talk about how to hire in a way that aligns with your business values, meets legal requirements, and helps you find the right person for the job. Representing your community and customers. There are numerous benefits associated with creating a diverse and welcoming workforce. Having a diverse group of voices helps you arrive at new and creative solutions. It's also helpful to have your team reflect the community that you serve. As you look to grow your business, consider if and how you would include these ideas into your management and hiring practices. There are ample resources online that provide guides, templates, and training. In addition, it's a good practice to create your own inclusion statement, which you can use in your hiring materials to help attract a wide range of qualified candidates. Job descriptions. Now that you have your job structure and general purpose, it's time to prepare a job description. This document accomplishes several goals. First, it helps you clearly visualize how this worker will interact with your business and what you'll need from them. Second, it shows the prospective employees or contractors what the work would include, whether they're eligible, and why they would want to work with your business. Third, it helps you build a more comprehensive list of tasks and responsibilities that you'll use for training and employee evaluations. To learn more about employee evaluations, see MOBI's session on managing and motivating employees. Your job description should include title. This is usually 1 to 4 words. Business description. The description may include your purpose, core values, vision, and what makes you unique, etc. Job overview. This summary is typically 2 to 4 sentences, including time commitment and hours. Explain where the job takes place. Tasks and responsibilities. This is a core list of responsibilities with a high-level explanation of each. Usually this is provided in bulleted form. Be concise and clear. MOBI provides a template that you can use to get started. Visit MOBI Resource Documents page on the Resources and Tools section of its website to download the templates. Qualifications include the knowledge, skills, and abilities you are seeking for the position. Organize expectations into tiers. Must have. The bare minimum to be hired might be dictated by insurance policies, local regulations, business needs, etc. Should have refers to the core knowledge, skills, and abilities all applicants should have. Nice to have, often phrased as ideal candidate or is a plus. Nice to have traits are those that, while not required, would make a candidate stand out. Examples: must be at least 18 years old and be able to work evening shifts. Should have experience in customer service, working knowledge of Microsoft Office. Ideal candidate would be bilingual in Spanish and English with prior experience in your business's specialty. This would be a nice to have example. Benefits include pay, type of pay, hourly, salary, etc., other benefits, perks, etc. Notable details. List any other notable details. Loud environment, heavy lifting, working outside, working at a desk, involves a lot of walking, credit check, background check, drug testing, etc. How to apply. Include information about the application process, in-person, online, email, resume, whether or not to include a cover letter, etc. Bonus, miscellaneous information. Here are some important things to keep in mind when creating your job description. While you're selecting your employees, they are also selecting you. It's tempting to create a long wish list for your candidate. However, listing too many qualifications or listing things that don't directly affect their ability to do the job will reduce the number of applicants. The goal is to strike a balance and find a great candidate who has the necessary background and experience to do the job. You should avoid jargon, specific language familiar to a particular group, industry, or profession, because these terms are unfamiliar and may discourage a qualified candidate. For similar reasons, it's best to avoid acronyms and other specialized language. You can only hire based on what's relevant to the job. It's important to know there are several things you cannot use in a hiring process that may result in a discrimination complaint or an EEOC issue. EEOC stands for United States Equal Employment Opportunity Commission, a federal agency responsible for enforcing laws that make it illegal to discriminate against job applicants or employees. According to U.S. federal laws, you cannot make a hiring decision based on race, color, religion, sex, including pregnancy, sexual orientation, and gender identity, national origin, age, 40 or older, disability, genetic information. For more information, see the ABCs of EEOC, a webpage on the United States EEOC website that explains the basics of hiring within EEOC guidelines. How to pay employees. There are numerous scenarios for compensating employees. Mainly, you'll want to consider how they are paid and when they are paid. The rules and implications will vary by country, state, and province, and your local community. Once you have an overview, you'll want to decide what's best for your business and research the relevant regulations. Here are some areas to consider. How worker compensation is determined. Workers might be compensated for being present, as in the case of a cashier or a store manager. Alternatively, workers might be evaluated based on the number of units produced or services offered, such as the number of haircuts or number of deliveries completed. Some employees might be paid hourly, while others are on salary. You should also consider forms of payment such as bonuses, commission, and tips. The method of payment. How will you actually send or give the payment? This could be in the form of a check, direct deposit, cash, or a combination of these options. The frequency of the payment. There's a range of options in this category. On one end of the spectrum, you might have gig workers or people who are paid daily for their service. More commonly, employees are compensated weekly or every other week. For contract workers, there may be other terms. For example, they might be paid at the end of their contract or as they meet key deadlines during the project. Whatever approach you choose, it's important to make sure both you and the employee are on the same page about compensation. It's best to clearly outline the arrangement in writing to avoid confusion and make sure everyone has the same expectations. The hiring funnel or the recruitment funnel. When recruiting a new worker, we can think of the expression cast a wide net. In this case, that means creating a lot of interest in a job so you can increase your chances of finding the ideal candidate. Stages of the hiring funnel. This process of starting with a lot of people and trimming down to find your new employee is called the hiring funnel or the recruitment funnel. Let's walk through the funnel now, and then we'll look at each step in more detail. Awareness. The position is posted to maximize awareness. As a result, a lot of people are aware of the position. Interest. Of those who are aware, some are interested. Apply. A smaller number of people apply for the job. Screen. You'll screen applicants and reduce the list to those you will examine more closely. Interview. You'll interview candidates and narrow down the list further. Offer. You'll select your top choices and make an offer to a candidate. Hire. You'll hire your new team member. To start, let's explore awareness and interest a bit more closely. At the awareness stage, the job opening has been shared widely, so that ideally a lot of people are aware of the position post. Of those who are aware, some are interested. Consider how and where you'll want to let people know about the role. This would include social media, word of mouth, flyers, online job boards, etc. Be sure to provide a way for candidates to gather more information or apply. Of those who are interested in the job, a smaller number of people will actually apply. Set up a process for applications. It could be setting up an online form, asking candidates to email a resume or drop off a paper application. Or you could host open interview hours where candidates could come in person. Once you begin receiving applications, it's time to start screening candidates and reducing the list. Ideally, you will have a pool of applicants that you can evaluate. The next step is usually to look at their application to determine if they're eligible and meet the different requirements you outlined in your job description. You should eliminate anyone who doesn't meet the minimum qualifications. Beyond the qualifications, you may also want to consider the application itself. Look for things like whether the candidate used good grammar, followed instructions, applied on time, etc. If a person's application has numerous errors and issues, that's something to consider as well. If you're in a fortunate position that you can have more qualified candidates than you intend to interview, rank your candidates in order of most qualified to least qualified and select those who most closely meet your criteria. Next, pick several candidates to interview. Aim to interview 3 to 7 people. After you're done screening the applicants you received, you'll interview candidates and narrow further. There are a few key steps in the interview stage of the hiring funnel, including defining job success, deciding how to evaluate, providing information and time for questions, and selecting your top candidate or candidates. Let's look at each stage in more detail. Define job success. Now that you've narrowed your group of applicants, it's time to evaluate them further. This is your opportunity to learn more about them beyond what you can see in the resume. Using the job description, consider the things that are crucial to success in the job and make a list of key indicators. Some examples include attention to detail, experience in customer service, knowledge of your computer software, reliability, management experience, etc. This could be a wide range of things, so it's important to pick the ones that are unique to your business and this specific role. Decide how to evaluate. Next, you'll design a process to measure your key indicators. List out each indicator and consider how you can determine if a candidate meets the criteria. Most often, this is done by asking interview questions. There's what you want to know and how you will learn it. Some of the most important things you want to know about a potential employee include their personality, core values, and soft skills like willingness to help, staying calm under pressure, or good time management skills. Any prior experience they may have, their knowledge, skills, and abilities, and how they would perform in your job specifically. So how do you learn those things about someone? First of all, you can ask them questions. There are numerous types of questions and ways to ask. We'll list a few here, but encourage you to do some online research to find extensive suggestions. Here are a couple of examples. Behavior questions. These explore past behaviors in relevant job tasks. Example, tell me about a time you interacted with an upset customer. Situational, hypothetical questions. Depending on the situation you choose, these could explore how a candidate thinks, their judgment, problem-solving capabilities, their knowledge of the industry or position, and their skills and experience. Example, imagine you're in this role while the phone is ringing and a customer is waiting at the counter. How would you handle it? In addition to asking, you could design a short task that's directly related to the job duties and ask the applicant to complete it. For example, if you're managing communications, ask them to write a social media post. If they need to manage your books, ask them to generate a sample report. It's generally a good practice to use the same questions and approach for each candidate to ensure there's fairness and consistency in your hiring process. In addition, remember to adhere to the EEOC guidelines, as mentioned earlier, and avoid any topics related to protected classes. During the interview process, you'll also usually want to include overview of your business and role. This is your opportunity to explain why your business is unique and share more about the work environment. This topic is usually covered at the beginning of an interview. Time for candidate questions. Save some time at the end for the interviewee to ask questions. Be prepared to speak to specifics about the role, questions about your management style, and details about compensation and employment structure. Now comes the time to select your top candidate or candidates. Rank order your candidates based on their interview performance. For your top choice or choices, you may want to call references, do a background check, or confirm their qualifications. Do your due diligence so there are no surprises later. For some, it may make sense to wait until after the offer has been accepted to do these steps. After you've selected your top choice or choices, it's time to make an offer. Once you have identified someone that you want to hire, it's best to reach out to them by phone or email to notify them that you're intending to make an offer. If they express interest and want to continue the process, you will move forward. Often in this conversation, you'll offer the candidate a job verbally, including the compensation rate, start date, and requirements needed before the candidate begins the job. This is known as a verbal offer. For some businesses, this may be all you need to do before the candidate starts. These include smaller family-run or local service businesses where roles are filled more casually. Some examples include small restaurants, food trucks, food carts, and cafes, landscaping or handyman services, cleaning services, local retail shops or boutiques, seasonal pop-ups or farmers market stalls, sole proprietor hair salons or spas, family-owned auto repair shop. In other cases, you will need to prepare an offer letter. This is appropriate for businesses that are more regulated, structured, or professional, where documentation is important for compliance rules and regulations, protection for both the employer and employee or contractor, and overall clarity. Some examples of these might include accounting or financial services business, healthcare clinic or private practice, care services such as child care or adult care, educational programs, retail chains or franchises, construction business with an office staff, law firm, software business, or technology startup. Your offer letter should include the candidate's name, position title, company name, start date, location of work, compensation details, the type of position, for example, full-time or part-time, at-will contract work, etc. Any conditions of employment, for example, the employee must maintain a valid driver's license, pass drug tests, etc. The date by which they need to accept or decline the written offer, usually within 48 hours to 7 days. How you should accept, such as signing or returning the offer, signature line and date, your name and title, and any pertinent details. The final step in the hiring funnel is to actually hire the new team member or members if you are hiring multiple people. Hopefully your ideal candidate will accept your offer and join the team. If not, you would determine whether your second choice would receive an offer. You will work through your list of qualified candidates. If you determine that no one in your application pool is qualified, you should evaluate the posting and restart the search process. After your applicant has officially accepted the offer to join your team, you should notify other applicants that they were not selected for the position. While this is never a pleasant task, most job seekers appreciate the update and the closure so that they can turn their attention to other opportunities. Depending on your relationship, it could be an email, phone call, or text. Before your candidate starts, be sure to check the rules and regulations where they'll be working to ensure you are in compliance with requirements. For example, typically new employees in the U.S. need to complete a Form I-9, employment eligibility verification within 3 days of the start date, and a Form W-4, employees withholding certificate, before starting their job. The Form I-9 and Form W-4 are on the USCIS.gov and IRS.gov websites, respectively. Additional forms may be required depending on the state. Unexpected situations. Situations may arise during the hiring process that are unexpected. Sudden changes in the market or economy could prevent you from bringing a new worker into your business, even late in the process. Or you may receive new information about a position or applicant that would prevent you from moving forward. If you change your mind about a candidate or are unable to continue your hiring process during the final stages of the hiring funnel, it's important to act quickly and professionally. If you've not yet made a formal offer, you can simply inform the candidate that you have decided to move forward with another applicant, or that you cannot continue the hiring process. If an offer has already been extended but not yet accepted, you should promptly contact the candidate to withdraw the offer, providing a brief but professional explanation. In cases where the offer has been accepted, you may need to consult legal or human resources or HR professionals to ensure compliance with any contractual obligations before rescinding or withdrawing the offer. Regardless of the stage, always communicate with respect and clarity to maintain professionalism and protect your business's reputation. Transition to success. Onboarding, managing, and motivating employees. The goal with your new hire is to get them up to speed and ready for success. This process of transitioning from a new employee to a successful employee is called onboarding. It typically includes a plan for training, expectations, pay structure, an employee handbook, and other key information. To learn more about this process and how to manage employees, visit MOBI's Managing and Motivating Employees session. Workplace transitions. When it's time for an employee to leave your business. Just as there's a process to add employees, there are steps and procedures to follow when it's time for an employee to leave your business. If and when this time arrives, there are practical, legal, and personal considerations that will guide your approach. This section covers the process for several scenarios and how to prepare for each situation. There are quite a few terms that mean firing an employee, such as terminating, downsizing, right-sizing, eliminating, removing, dismissing, laying off, severing ties, and ending the relationship. While some of these can be used interchangeably, others vary by situation. In this section, we'll cover how different scenarios change the language you use. As with the rest of this session, it's important to know the legal considerations and guidelines that apply to your business. These will change over time based on your country, state, or province and local laws. In addition, some rules only apply to businesses of a certain size. Be sure to do your research so you're in compliance with the law. How employee departures impact your business. While firing an employee can be a difficult experience for everyone involved, there are also benefits to consider. If you have a particularly problematic employee, they are likely having a negative impact on other parts of the business. They may be rude to customers, which may hurt profits. They might be causing friction with other employees, which reduces trust and morale. You want to wait until you're sure it's the right decision, but you don't want to let the situation linger or get worse. On the other hand, you may have an employee who's a great person, but is just the wrong fit. Similarly, new business constraints or changing market conditions might also mean that you need to downsize or reduce your staff to save money and your business. In all cases, you'll want to be efficient, clear, and fair so that the employee can move on to find something that's better aligned with their skills. Offboarding. Just as onboarding refers to the process of bringing an employee into your business, the term offboarding applies to employees leaving your business. The offboarding process should cover any and all steps that need to happen when an employee leaves. It's important to have your offboarding details in place prior to removing an employee so that you're not caught off guard and you're not rushing or scrambling to make decisions in the moment. There are several topics and tasks that should be addressed. Explaining remaining pay, what's the amount, how and when will it be distributed. Collect physical materials. This could be keys, electronics, safety equipment, and any other company-owned property that an employee received. Secure or change digital access. A former employee should no longer have access to any systems, asset, or infrastructure for your company. You should deactivate email, change passcodes, update keypads, remove from the accounts, and eliminate any other digital access. Transition knowledge and accounts. Make sure you get all the necessary information to continue running your business. Depending on the circumstances of the departure, you may ask them to hand off accounts, share processes and directions, or locate physical or digital assets. Update internal information. When an employee leaves, the other employees notice and may be impacted, so it's best to make sure they're notified of a departure. They don't need to know any of the details, but they do need to know if a colleague is no longer on the team. Be open and direct about the change or changes to your business and what other team members can expect. It reduces gossip and builds trust and transparency among your other team members. Update external-facing information if applicable. Once an employee leaves, it's important that they're no longer associated with your company. This might be removing them from your website, newsletters, or social media mentions. Establish a way to communicate. You may need to reach a former employee for a variety of reasons, such as follow-up questions or sending tax documents. Make sure you have a way to reach them through several methods, including phone, email, and mailing address. Conduct an exit interview if appropriate. Employees are a wealth of knowledge when it comes to your business, effectiveness, and operations. They may have feedback to share with you about their work experience. If possible, it's best to schedule this discussion separately from the termination conversation. It's also helpful, but not required, to have a neutral third party or objective person conduct the interview so you get the most candid responses. Exit interviews are most common when an employee has decided to leave the business. Types of departures. There are two main ways this could happen. One, employee initiated, where the employee decides it's time to move on. And two, employer initiated, where the employer decides to end the relationship. In addition, some employees in some states are considered at will, which means the employer or employee can end the relationship at any time, while others may have more protections or even be contract workers, which includes specific terms of the employment. Make sure you know which types of employment structure applies to your situation. Let's start with employee-initiated departures, also called voluntary termination. Even the best employees often move on to new or different opportunity. Your employee handbook should outline the process for submitting a resignation. A resignation is notice that you intend to quit or leave your job. In this scenario, express your appreciation for their service and follow the offboarding process you've built. While it may be difficult to lose a good employee, Maintaining a positive relationship during the transition is always a good idea and may even provide future benefits. Perhaps this employee will recommend your next employee or refer a new customer to your business. In other cases, you may find you need to end a relationship with an employee. This would be an employer-initiated departure. With employer-initiated terminations, the first consideration is whether the situation is with cause or without cause. With cause termination means that the employee's behavior is the cause of their termination. It could be failure to meet goals, abandoning the job, or a variety of other reasons. You may also hear this called dismissing, firing, or ending the relationship with an employee. Breaking that down further, here are two additional scenarios. You might be dismissing an employee due to misconduct. Some egregious actions, meaning outstandingly bad or illegal conduct, like theft, assault, or job abandonment, may warrant immediate dismissal. Or you might be dismissing an employee due to performance. The employee should be given clear feedback ahead of the decision, and they should know that termination is possible if they do not improve. You may consider putting the employee on probation or on a performance improvement plan, known as a PIP, as an intermediary step. In some cases, a documented process with warnings and opportunities for improvement may be required depending on the position, your business, and your location. It can be a good idea to include this process in your employee handbook. See MOBI's session on managing and motivating employees for more information. The other type of employer-initiated departure is without cause. These terminations may be related to larger scale changes within the business. For example, in the case of layoffs, business closing, moving locations, etc. You'll also see and hear terms such as downsizing, right-sizing, and restructuring. Preparing for the termination conversation. Whether the reason for termination is with or without cause, you will need to notify your employee they're being let go. It's always best to communicate this in person through a direct conversation. Since this may be a difficult or emotional conversation, it's a good idea to prepare and even practice your key points. Anticipate questions and make a list of information you might need. Let's discuss things you should and should not do when having a conversation. Here's what you should do. Write an outline in advance for what you plan to say. If the termination is with cause, it's a good idea to write down key issues that led to the decision so that you can refer to them if needed. Begin your conversation by getting right to the point. You could begin by saying something like, "We need to have a difficult conversation," or "I have some bad news I need to share with you." Stay calm, respectful, and firm. Be empathetic in answering questions the employee might have, but emphasize the decision is final. If you don't know the answer to a question, it's okay to respond with, "I'll get back to you on that." Consider having another person present if possible. Ideally, an objective third party like HR or your business partner, not one of their peers. Thank the employee for their contribution to your business if appropriate. Offer to be a reference if appropriate. For example, if you have to let someone go due to market conditions and they are an excellent employee, you could offer to be a reference. What should you not do? First of all, do not get pulled into an argument. And second, don't make it personal. Focus on key issues and not the employee's personal characteristics. Parting on good terms. Whenever possible, try to part ways on a positive and respectful note, on good terms. While this may not always be achievable, handling difficult situations with respect and compassion can lessen feelings of anger or resentment. Employees may leave for various reasons, such as pursuing new opportunities, family commitments, or furthering their education, and they could potentially return in the future. It may be easier to part on good terms when there are circumstances beyond the business's control, such as economic factors or a natural disaster. However, even workers who you've had to let go for performance reasons may still have connections within the community that could impact your business. By fostering a positive or at least neutral interaction during separation, you leave the door open for former employees and contractors to become customers or advocates for your business. The top 10 do's and don'ts. The top 10 do's. 1. Do check all the employment rules and regulations for your country, state, province, and local community to make sure you're in compliance. 2. Do decide the type of help you need and how much help you need. 3. Do consider whether an employee or contractor would be better for your business. 4. Do complete a cost-benefit analysis to determine if it will be beneficial to hire. 5. Do consider how representing your community and customers in your hiring practices could enhance your business. 6. Do create a thorough and accurate job description so that both you and the job applicant fully understand the role. 7. Do cast a wide net when hiring so you have a sizable group of applicants to consider for the job. 8. Do create a hiring and interview process that will help you find the ideal person to join your team. 9. Do create an offboarding process before you need it. Have this process ready to go so you're not scrambling to create it when an employee leaves your company. 10. Do create an outline for any termination conversation. Be brief, calm, decisive, and to the point. The top 10 don'ts. 1. Don't avoid or ignore relevant regulations, rules, or processes. 2. Don't hire a new worker before conducting a cost-benefit analysis. 3. Don't set the bar too high for applicant qualifications. Make sure you're asking for knowledge, skills, and experience that are realistic and relevant to be successful in this job. 4. Don't wait until you've hired a new employee before planning how they will be paid. 5. Don't make hiring decisions based on applicants' race, color, religion, sex, national origin, age, disability, or genetic information. 6. Don't ask different questions for each candidate you interview. It's best to be consistent to ensure a fair evaluation. 7. Don't forget that payroll service providers can help you do payroll and ensure you are correctly following tax laws and other requirements. 8. Don't keep a bad employee longer than necessary. They can do damage to your business and to your team. 9. When firing an employee, do not get pulled into an argument and do not make it personal. 10. If possible, don't part on bad terms with employees who are departing from your business. Congratulations! You just completed this session on hiring and firing. Remember, every hire is an investment in your vision, and every departure is a chance to learn and grow. As your business evolves, so will your team. With what you've learned today, we hope you feel confident to take the next step, whether it's hiring your first employee or navigating a tough transition. You've got this. For additional resources, visit the MOBI Resource Documents page in the Resources and Tools section of the MOBI website. If you're taking this session as a part of a course, don't forget to log in and take the quiz for this session. Feel free to pause now and review or download any of the resources from this session online, or continue with the next session for more information. Good luck.